I'm Frank Holland here at the New York Stock Exchange, looking at how the U.S. Iran conflict is having a big impact on the global supply chain. Now, the biggest impact is that this military action has effectively shut down freight traffic in the Red Sea, forcing governments and companies to change their logistics plans. Now, oil, major import expected to be impacted, and that's why prices are higher, but there's also potential for a number of other exports from Europe and the Middle East, as well as other parts of Asia, to be impacted. Now, here's the real issue for the global supply chain. Shipments are going to take longer and they're just going to be more expensive. The Red Sea effectively shut down for ship traffic during this conflict. Governments and companies look to other routes, including moving shipments through the Cape of Good Hope at the southern tip of Africa. Just to illustrate, if you want to move goods from Shanghai to New York through the Red Sea, that trip's over 12,000 nautical miles. If you go through the Cape of Good Hope, the trip's over 14,000 nautical miles, or 15% longer. Also, that opens shipments to other issues in the water, including storms or other problems. Now, here's an analogy. It isn't quite apples to apples, but can help illustrate what this change means. So just imagine you're driving your car, you run into traffic, and your GPS tells you to take a detour. You take that detour, you could be saving time, but you could also run into other issues on the road. Not exactly apples to apples because ships have to take this detour. They don't have an option. But the key point is it opens it up to other issues on a longer trip that, again, is going to be more expensive. So the question is, how much more expensive? Well, that depends on what's being shipped and to where. The major carriers like Maersk and Hapag-Lloyd, they've announced conflict surcharges of $1,500 or more, and that's on top of fuel surcharges. Now, these surcharges are essentially just extra fees in this case. There's a fee for conflict, or again, the military action with the U.S. and Iran, and that's to mitigate extra costs from the conflict that the company could incur. And there's also a fee for fuel, so companies don't lose money on the fluctuating prices of diesel fuel. In this case, the cost of fuel is actually going up as well due to the conflict, so that surcharge is going to be higher than perhaps it normally would. The big question, what goods will be impacted? Well, oil is the primary good being constrained by the effective Red Sea shutdown. The others are not as clear, especially for us consumers. We do know that about 50% or more of aerospace, auto, and pharmaceutical imports into the U.S. that come into East Coast ports. Europe is a significant exporter of aerospace, auto, and pharmaceutical goods, and imports from China to the U.S. East Coast are expected to take longer because of this situation. For the most time-sensitive shipments, however, air freight is also an option, but again, it's more expensive. Clearly, you're seeing a theme here. This is going to be a lot more expensive. For investors, this disruption from the U.S.-Iran conflict is giving a big boost to shipping stocks. Maersk and Hapag-Lloyd, two of the biggest carriers, they moved higher today, largely as expected. Also, names like C.H. Robinson and Expeditors are higher. The last two, they run big global forwarding businesses. That's essentially brokering freight for global shipments. UPS and FedEx are also expected to benefit, with both offering air freight and global forwarding services. Now, there is a saying in transports that mystery equals margin. In this case, with no clear answers on how long this conflict will last, carriers can simply charge more, making their services more profitable. So generally, when we see disruptions in the Red Sea in this area, the U.S. isn't directly impacted. Number one, because there's alternative ways to get goods from Asia to go to West Coast ports, but things still going into East Coast ports can take longer. Now, the question a lot of people want to figure out is, are we going to see shipment shortages or shortages of things on shelves here in the U.S., or will prices go higher? We haven't seen that during previous conflicts. In fact, many of these carriers, they actually just resumed their services in the Red Sea a few weeks ago, fully resumed their services in the Red Sea a few weeks ago. And I don't think many of us noticed it. But there is a chance that imports from Europe could be impacted and take longer. We could see some shortages of things that are not time sensitive from Europe, the Middle East, or perhaps even Asia. Specifically, we're looking at the eastern part of the U.S.